Okay, wonderful. What I'll do just now is I'll just get my screen up and we'll begin the presentation. Oh, the computer is not happy with that. All right, so I'll just bring this one across and we'll get started. Normally works so well. What I might actually do while I'm sorting that out, can I just see in the chat and we'll get a little bit of engagement going on. Can anyone tell me what they think tax is? Just in a really simple, about one sentence, maybe two sentences, what it is, where it comes from, what it pays for.
Contribution that we make to public service.
Yeah, I really like that. Do we have anything else?
No.
Alrighty. So, apologies, we're almost there. And what it's doing is a very wonderful job of actually sharing my second screen. So almost got it there. Okay, this looks like it should work. Can everyone see my slideshow and can they see me right now?
Yes.
Yes, wonderful. So we had the contribution to the public service. And look, that's actually a really good way to start the conversation, because when we talk about tax, we talk about, a lot of people get caught up on the first part of the conversation, which is where people take my money, the government takes my money. But we always want to bring it back to focusing on where does that money go? And the point that was raised, that its contribution to the public service, is really, really quite powerful, because when we talk about tax, we talk about the things that it pays for and how it benefits the community as a whole. So what I might do, that's working really well. This is what we're going to be talking about today. We're going to do a bit of a quick overview on why we pay tax, how we pay tax in Australia, how to keep your tax file number safe, as well as how to do a tax return or different ways that you can do one. We're also going to talk a little bit about protecting yourself from scams. Can I see on those who are on webcams, who's heard of the ATO scams? Give me a little hands up or a thumbs up.
Sorry, can you repeat the question? Sorry.
Oh, that's all right. So has anyone heard of the ATO scams?
Yes.
Yes. Okay, good.
Used to get your money, yes.
Yeah, wonderful. So what we're actually going to do is we'll talk a little bit about that as well. That's what I wanted. I've got the chat open, so now I can see if you are typing anything in chat, that's going to be awesome. I'll be able to read that. So what is tax? Tax is the money that the government collects from people and businesses to pay for services to the community. We pay taxes to help fund things such as our hospitals and health services. So when you go to the doctor and your visit is bulk billed, that means that you don't have to pay. And that's because our taxes pay for Medicare and the doctor's wages. We also have things like schools and education. In Australia, it's free to go to school. And also, you notice that even with our private schools, they also receive some tax dollars in funding as well. We also pay for things like roads and social security and welfare payments. And that's pretty much any payments you might receive from Centrelink, that comes from taxes. So when we think about all these things that taxes pay for, it really comes back to, it makes Australia a really great place to live. If I was to injure myself, I don't have to worry about $1,000 hospital bill or where am I going to find the money for that. If I potentially lose my job one day, I don't have to worry about falling into that poverty trap, because we have these services that the community pays for and the community also benefits from. So how does tax work in Australia? In Australia, people pay different amounts of tax. The more you earn, the more tax you pay. The amount of tax we pay is based on our total income from all our sources. This can include the pay we receive from our jobs. This includes the JobKeeper payment that you might have heard about recently. Any government payments you receive, like the Job Seeker payment or the coronavirus supplement. That's like that $550 payment from Centrelink. And that's while you look for work. We also will pay tax on any interest you earn on any savings you have in the bank, as well as any foreign income you may have. If you take leave, are stood down or lose your job because of COVID-19, you may receive a special payment from your employer. Your employer may call this a stand down payment, a COVID-19 payment, or even a pandemic allowance. It doesn't matter what your employer calls these payments, we treat them the same as your usual payments from your employer. This means you declare them as wages and salary on your tax return, and you pay tax on them at the normal rate. Also note that the Centrelink economic support payments of about $750 and the early release super amounts are not taxable. So let's just take a step back. In Australia, if you work, you make a bit of money, the government will take a little bit of that money and pay for the services that we all use, okay? So you may earn money from your job, we'll take that, and then you may earn money on interest, say you have money in the bank. Then we'll calculate your tax on both of those amounts all together. I might just quickly stop there and ask, do we have any questions at all? So one thing I would stress is that if we do have any questions at all, please feel free to chuck them into the chat. That's what I'm here for, to answer any of them. So what I want to talk about now is that PAYG, or pay as you go. Can I see in the chat, who knows what pay as you go means? It has a bit of a hint. It's got that withholding. And I'll give you a hint. It's got to do with when you earn your money, something being withheld. So look, the idea about pay as you go is that every week when you earn your income from your job, for example, the government takes a little bit of money out of your paycheck. Every single week when you earn money, a bit more money comes out to pay for your taxes. The idea is that at the end of the year, you don't have a massive tax bill. So what happens is your employer will take or withhold tax out of your pay every week or fortnight. When they pay us, they give it to us and they assign it next to your tax file number. And that really just stops you from having that massive tax bill at the end of the year, because really you are paying it every single week. Your employer will use tax tables on our website to work out how much tax to take out of your pay. You can also look up those tax tables by typing in tax tables on our website. And depending on how much you earn, that depends on whether how much tax you'll pay, and it really depends on your individual circumstances as well. So this also might depend on whether or not you have a tax file number or if you have more than one job. The amount of tax that your employer has taken out should be shown on your payslip. Your employer gives this money to the tax office and the amount is recorded against your account in our systems. Then, when you do your taxes, we can see that you've already paid that amount of tax. At the end of the tax year, you can see the total amount your employer has paid you for the year and the total amount of tax that has been withheld from your pay for the year on your income statement. Now, you can see your income statement in the ATO online services when you log into your MyGov account. Here's a bit of a warning though. Sometimes we hear stories of individuals who their boss says to them, look, I'm going to take that tax out of your pay and I'm just going to keep it in my back pocket and I'll take care of it. Don't you worry. Now, you should have a bit of those warning signs at the back of your head where you should be thinking, hey, that's not right. Remember, when your tax is taken out of your pay, it's sent to us at the ATO and it's put against your tax file number. So some of you might be wondering, well, how much tax do I actually pay? So as we can see in this graph here, this whole graph explains the entire tax system in Australia. And I've just noticed that we've got a, I cannot hear your voice, please help me. That's fine. I might just confirm, can everyone still hear me fine? It might be on your end as far as turning up your volume. It looks like that's fine from everyone else. Okay, I'll just keep proceeding. If you are experiencing a few issues with that, it might be good to speak to Sarah, message her privately. She might be able to help you out. So just coming back to how much tax do you pay, I want to draw your attention to that $18,200, that where it says that 0 cents. Pretty much all that means is that in Australia, you pay no tax on your first $18,200 that you earn, okay? let's say that another way. That's as if you earn $350 a week, every single week for the 52 weeks of the year, okay? So you should start to think that when you earn over that 350 a week, that's when your employer might start to take tax out of your pay. But generally, if you earn under 18,200, you won't pay any tax. Well, what does the next step mean? That 19 cents in that blue bar? Well, that 19 cents means that for every dollar you earn over $18,200, 19 cents comes out. So let's say, for example, you earn $18,201. Well, on that $1 you earned, that falls into that blue threshold, 19 cents gets taken out, and that's all you have to pay. Say you were to earn $18,202. Well, we've got the $2 that fall into that bucket, 19 cents, 19 cents. That's how much tax you pay. Remember, the first 18,200 you earn, you pay no tax on. If I draw your attention to the red bar at the very end, that $180,000, I think there's going to be some of us there who are looking at that and thinking that's going to be me in a few years. You're not going to pay 45 cents on every single dollar. Remember, your first 18,200, no tax. The next 18,800, 19 cents on the dollar out of every dollar. The next $53,000 you earn, 32.5 cents will come out. And so as we move our way up the system, that's when you start paying more and more tax, okay? And the reason why we have a system like that is so that those who can afford to pay more for tax do, and those who can't don't have to pay as much tax. Don't forget, if you pay too much tax during the year, and I'll talk about a little bit about why that may happen. If you pay too much tax in a year, and then we calculate, let's say, for example, you earn $10,000 this year, but you paid $200 in tax. At the end of the year, when you do your tax return, you'll lodge your tax return. You'll tell us, I only earned $10,000, and we will refund you that $200 in tax that you paid. But that will only be credited when you do your tax return. And I'll talk about that in a little bit more detail later. Please note the above rates do not include the MiCare surcharge, which is an additional 2%. So I do want to actually just take a moment there. And does anyone have any questions at all about what I've said? No, nothing at the moment. Again, don't be afraid to speak up and give me your thoughts. I am here to answer any question that you have. So the tax file number, as you can see on the slideshow, it says your tax file number is a unique number issued by us to identify you for tax purposes. Now, I want to focus on the unique for a moment because that tax file number, everyone has a different one. So my tax file number is different to yours, which is different to your teachers, which is different to your friends. We all have our own tax file number, okay? And we use that tax file number to record how much pay you've earned and how much tax your employer has taken from your pay. And that makes sure that you pay the right amount of tax. You don't have to have a tax file number, but if you don't give your tax file number to your boss within 28 days of starting a job, then they may have to withhold 47% of your pay as tax. And this means you're paying too much tax. Again, if you don't give your tax file number to your boss and they start withholding that 47%, and then you come to the end of the year and you realize, oh, I've paid way too much tax, you'll be able to get back the tax that you shouldn't have paid when you lodge a tax return. So as I was saying before about the unique tax file number, it's special. Your tax file number identifies who you are. And so if you were to lose it, it can be used for some pretty scary things. So we have a few tips to keep your tax file number safe. That is, do not keep your tax file number where it can be easily lost or stolen. So don't keep it in your wallet, don't keep it on your person. It's really good if you actually keep it somewhere safe and secure when you know what it is. Don't share your tax file number with your friends. They can't do anything good with it. And don't give it to anyone on the internet. And on that vein, it's actually important to remember that you only give your tax file number to organizations that are allowed to ask for it. And also don't include your tax file number in your job application or your resume. You only give your tax file number to an employer after you've started the job. If you think your tax file number has been lost, stolen, or accessed by someone who you didn't give access to, contact us as soon as possible to report this. We take this really, really seriously, and we can do a few things to help you out. So you might be wondering, who can I give my tax file number to? Now, these are some of the organizations. The first one is Centrelink. Centrelink is that you'll give your tax file number to Centrelink, and that'll be part of the payments that you receive. Remember, for the majority of Centrelink recipients, you do pay tax on your income from Centrelink. You can also give your tax file number to us at the ATO when we ask for it. And you can also give it to a registered tax agent if you're paying someone to do your tax return for you. We've already touched on employers, so we know that we can give our tax file number to our boss, but I really have to stress that you only give it to your boss once you've started work. Don't give it to them as part of the interview process. You can also give it to your superannuation funds, any universities or tertiary institutions that you attend, as well as your bank. Remember, when you earn interest on your bank, that is part of your assessable income and it will be taxed. Remember, with the ATO, we use your tax file number to identify you when you contact us. If you have lost your tax file number, we will ask a few other questions to verify who you are. So one thing I want to talk about is cash in hand work. And what I might actually do is ask another question to everyone here. And don't be afraid to type it in the chat or raise your hand. Who here has done cash in hand work? Okay, very good. No one told me that they've done it. That's very smart, not telling the tax man that. No, look, I'm just kidding. Your employer can actually pay your wages in cash rather than into your bank account, okay? It's okay to be paid cash in hand. The problem that we sometimes see though, is that sometimes businesses deliberately pay their employees cash to avoid meeting their tax and employee obligations. So that might be things like trying to avoid paying you super. If you're eligible for super, that's an extra 9.5% you should be getting paid. Say, for example, you earn $1,000 in 1 week. That extra super is $95 that your boss may be trying to avoid paying you. Another thing we unfortunately see is that when people pay cash in hand, sometimes we see that they don't have insurance on the worker. So if you have an accident on the job site, you might be exposed both physically and also financially. Another thing that you should probably keep in the back of your mind is that in Australia, when you earn an income, you should receive a payslip. On that payslip, it will tell you how much you've been paid, the hours worked, and how much tax was taken out of your pay, as well as the super. Sometimes what we see with the cash in hand is that they don't give that payslip. So you really have to have that warning sign at the back of your head if you are being paid cash in hand. But I have to stress that it is okay to be paid cash in hand for the work you do. And look, at any point, if you're unsure, you think something might be up, please give us a call and we can have a chat to you and explain what's happening. Also, if you want more information, there is a link on the page right there, that ato.gov.au /cash wages. And I just want to touch on that a little bit more. Businesses sometimes deliberately pay you cash to avoid paying tax and to avoid their responsibilities for their workers. This is known as the cash economy or the black economy. They're not only cheating you, they're cheating the whole community because they're not paying their fair share for the services the government provides that we all benefit from. If your employer pays you cash, you could be missing out on all those things that I mentioned. But most of all, it's kind of unfair when we're all trying our hardest to make the system work really well for all of us. Remember, even if you are being paid cash in hand, you do have to declare the cash as income when you do your taxes. So if we find out that your boss hasn't been doing it properly, we'll be seeing that you're lodging a tax return, doing the right thing, and we'll say, hang on a second, this business hasn't told us that they've paid you. Oh, something's not right there. And it may make things a little bit sticky for everyone. So check your employer is paying you the correct amount, is paying your tax, and also making sure that they're paying you your correct superannuation amount as well. This kind of leads on to the next point is, do I need an ABN or an Australian business number? Remember, ABNs are for businesses. You do not need an ABN if you are an employee. And without getting into too much detail about that, Sometimes businesses try and classify workers as contractors and ask them to get an ABN. They may not understand the difference between a contractor and an employee, or they may be trying to avoid their responsibilities. If an employer you work for treats you as a contractor when you should really be treated as an employee, again, you could be missing out on entitlements such as award pay rates, work cover, superannuation, sick leave, and holiday pay. If you're unsure if you're working as an employee or a contractor, talk to your employer to make sure they understand all the terms and conditions of your working arrangement. Again, you can contact us for help if you're not sure. So for those of us who might be running Uber or the other ride sourcing enterprises, this means that you must have an ABN and you must be registered for GST. The GST registration starts from the date you started ride sourcing, regardless of your income. Apprentices, labourers, and trainees are always employees for tax and super purposes. This is another really great resource that you can also use, the Fair Work Ombudsman. So the Fair Work Ombudsman can help you understand your workplace rights, obligations, and resolve any issues you might have with your boss. I really recommend you have a look at this website because there's lots of information there. They also have lots of calculators, pay and conditions tools that you can use. And if you feel like something's not right, you can also give them a call and they can help explain whether anything dodgy is going on. We've just had a wonderful question come through. It's like, how do you pay tax on a Centrelink payment? I don't understand that. So what we say with Centrelink, we consider it, think of it like a job where every week when you get your Centrelink payment, we classify that as if you were getting income from the job that you're working. And so imagine that from Centrelink, for example, you earn $20,000 from Centrelink. Well, at the end of the year, we'll calculate how much pay Centrelink gave you, and then we'll calculate your tax amount. It's probably important to remember though, that if you're only getting paid $20,000, there's lots of low income tax offsets. Your Centrelink payment might also not be taxable to begin with. So I know that the disability payment is not taxable. But for like your New Start, your youth allowance, that's considered assessable income. And we calculate how much you've been paid, and then we calculate how much tax you should pay on it. Again, you do have the option through Centrelink that every week, if you're receiving a bit of money from Centrelink, you can actually do the same thing as the PAYG and have a little bit of tax withheld just to make sure you don't get a tax bill at the end of the year. We also had another wonderful question that's come through. If you have an ABN, do you only put in a tax return if your income is over $18,200? Look, I'm actually going to touch base on that one in more detail when we get to the tax returns at the end, but that's a fantastic question. I will come back to that. So just for now, I'm going to talk about what is super, because I've talked a little bit about superannuation. What is super? Pretty much all super is, it's money set aside over your lifetime to provide for you in your retirement. If you work, your employer may have to pay super for you. So I said before about the 9.5%, that's extra money on top of your wage. And if you're an employee, you're entitled to the compulsory super contributions from your employer if you're 18 years old or over. You also have to be paid $450 or more before tax in a month. So if you earn, say, $200 per week, and you're a casual full-time, part-time employee, you'll be eligible for super. And your employer pays that extra money into a super fund on your behalf. This money comes directly from your employer, not from your pay. It's extra money on top of it. It doesn't matter if you're full-time, part-time, casual, or if you're a temporary resident of Australia. The one exception to that is that if you do have an ABN, the requirement is on you to pay your own super out of the money that you receive. Do we have any questions at all on super? Feel free to chuck it into the chat there. So I'm actually going to come back to that question we had before as well about the ABN. So it's about lodging your tax return. Generally, if you had tax taken out of your pay during the year, or if you earned over $18,200, you will need to lodge a tax return, okay? So if your income is over $18,200 or you've had a single dollar or more taken out, you must lodge a tax return. A tax return is the document used to tell us, the tax office, how much money you earned for the financial year, less how much it cost you to make that money. So for example, imagine you earn $20,000, but you spend $100 on some safety boots for your job. You will now get taxed on the assessable amount of $19,900. Remember, the financial year for Australia runs from the 1st of July to the 30th of June. So unless you're using a tax agent, you have until the 31st of October to lodge or file your return. Oh, we've got some wonderful questions which are coming through. How can I add money to my super from my bank? If you have an online My Tax account, there is actually an option there to put your own money into your super fund. That's all done online. You can also go to your boss and say, hey, look, out of my pay, can I have a little bit extra taken out and put into my super fund? There was another question, which is, if I take money out from my super last financial year, do I have to include when lodging my tax return? So if you took that money out as part of the early release of super program, no, that's not included in your assessable income. That is tax-free. So the options available for you to lodge online are using My Tax. You can also use free help with a tax help volunteer. So we run a tax help program where if you earn under $60,000 a year, you will be able to get access to a volunteer who will help you do your tax return for you for free. It's important to note that the online through My Tax is also for free. You can also pay someone to do your tax return for you, and that's through the registered tax agent. To lodge your tax return, you will need the following information. You'll need details of any income you earned in the last financial year, and you'll need details of any deductions you're eligible to claim. You can look at our website for examples of things that you can claim for. It's important to note that when you get paid in Australia as an employee, your boss is also going to tell us how much you got paid. So when it comes to tax time, some of the things we'll be checking for is to see that you're writing the right amount of income and making sure that your deductions are not too crazy, okay? Remember, with the deductions, they have to be related to the work that you do, and they can't be for personal expenses. So for example, I can't claim my suit just because I can also use that in my personal and private time. But for example, safety boots to protect you on the work site, well, you require that to do your job safely. So you would be able to deduct that. So if you are interested in lodging online with My Tax, the first thing you'll need to do is create a MyGov account. Now, I think for most of you, you'll have a MyGov account already. So from that point, you just have to link your account to the ATO. You can either do that by answering some questions that we have, or you can call the tax office to get your linking code. Have your birth certificate, passport, or citizenship certificate handy to prove your identity. Finally, sign on to MyGov, go to the services page and link to the ATO. Select the I have a linking code and follow the instructions as prompted. And do this within 24 hours or you'll have to get another linking code again. Okay, so we've got some wonderful questions coming through. Sometimes my superannuation gets reduced and then goes up, very unpredictable. So that's a really good point about superannuation. With superannuation, that's money that you put into, think of it like a special bank account. And what they do at that super fund is they then invest it in other things around Australia. It's important that you do research on what is a good super fund, because while they are investing it, it is an investment and there is a chance that you can lose some of that money. So if you're curious, do a bit of research, probably get financial advice on what is a good super fund. It's important to remember that super funds will also charge you administration fees as well. And what that means is that if you have multiple super funds, you'll be paying multiple administration fees. Do we have a question at all?
Anything else in this you want to look at, Johnny? No, I think that's good. It really helps, I think, in terms of just helping me identify, yes.
Yeah, okay, wonderful. How much do you get tax from investments? So again, how we calculate that, so with investments, so say for example, you're buying a house or selling a house and you've made a profit on that. The first thing we do is that you can't deduct your normal expenses. So say you bought work boots against your investment for your property. But once you've added your deduction. So say you sold the house and you had a few expenses in selling your house. Then we have the final amount of profit that you made. We then add that onto all the other income that you made that year. Okay. And we see how much you've earned as a total, and we calculate the tax based on that. Would you please explain more on the work from home tax return arrangement this year? So I think you mean the tax deduction. So the ATO has actually really simplified this deduction process. And whereas in previous years, you had to calculate the square footage of your home, or you had to figure out what your bills were. If you were working from home, the Commissioner has allowed you to have a flat rate. So that's a flat, I forget what the amount is, a flat rate per hour that you work at home. And you calculate how many hours you worked at home in your job, and then you take that and you put that as the deduction at the end of the year. Can you create a MyGov account if you're an international student asylum seeker? Yes, you can. That's a wonderful question. So for those, I hope those answer your questions. If you have any follow-on questions, please keep them coming. I really, really think they're wonderful. It is 80 cents per hour. Yeah, thank you for that. Yeah. Wonderful. I thought that was the case, but I was afraid to say something in case I got it wrong. So look, I want to come back to the scammer. We were talking about before what happens if your tax file number gets accidentally leaked. Now, scams are tricks that criminals play on innocent people like you or me to try and steal our money, our personal identity details, or both. In Australia, a criminal who tries to scam or swindle people like this is called a scammer. Now, we regularly hear about scams in the news and on social media, and scammers only need some very basic details such as your name, date of birth, address, or tax file number to commit identity crime. Now, if criminals steal your identity, it can take a long time to fix. And it also is your responsibility to prove that you're the one who wasn't doing some of those dodgy things. It can also make it really difficult to get a job, a bank loan, or apply for government services or benefits. Another thing that they might do is they might just sell your identity to organized crime groups. And suddenly it's no longer a financial risk, it becomes an actual criminal risk as well. So without trying to scare you, I just want to really stress the importance that if we don't let our information get out there in the first place, by keeping it safe and secure, we won't have to worry about most of these issues. Now, I do want to talk a little bit about the ATO scammers. So I'm going to give you a few tips on how to spot a scam. If someone contacts you and they say they're from the tax office, there are some little warning signs that you can think about and that you can look out for. So that might be abusive or threatening behavior. The ATO will not act in an abusive or offensive manner or threaten you with immediate arrest. We can't do that. Our staff will always talk to you in a polite and respectful manner. If you are unsure if someone is really from the tax office, you may ask for their details and ask to call them back. If they're really from the tax office, they will be happy to do this. But if they get angry with you, then it's probably a scam. Please hang up the phone. And on that, I'd actually say that if you're even a little bit unsure, say I call you and say, hi, it's Alan Harrison from the ATO. If you're unsure about that, I'd much rather that you hung up the phone on me and then called me back. And by calling us back, you'll get through to our call center and they'll ask, hi, what can we do for you? You'll say, hey, I got a call from the ATO. I'm not quite sure if that was from the ATO. They'll look into your account and they'll see either, yes, Alan called you, or no, that was probably a scam. And then for that point, you can actually report the scam. Another thing you also should be looking out for is if they demand immediate payment. We will not ask you to transfer money into an account with a BSV that is not held with the Reserve Bank of Australia. We will not ask for payment through unusual methods such as iTunes gift cards or other prepaid cards. And we'll not ask you for money in order to receive a refund or other payment. And we won't also stay on the phone and make you go to the bank or the post office or shops to make a payment. Now, if you do have a tax debt, and sometimes that does happen, we will inform you before it is due. You can also check if you owe us money through your MyGov account or by calling us up and checking. We do provide you with a range of legitimate payment options on our website if you have a tax debt. Another thing is just be aware of people trying to ask for your credit card or bank details by email, text, or social media. We won't use email, text messages, or social media to ask you for that information, We also won't ask for your tax file number or other personal information. And we also won't send you downloadable files or tell you to install software. If in doubt, give us a call and just ask us to see, hey, this seems a bit dodgy. We can explain it to you. Another thing that sometimes happens is that sometimes the offer is too good to be true. If it is, it probably is. Offers to unlock your super early, investments where you need to act quickly before an offer ends, or maybe even a refund that's coming your way, are signs of a scam. If you're in any doubt, please contact us for advice to confirm if something is genuine. So where can you go for help? We have a list of phone numbers on here. And like I was saying before, if you are unsure about anything, give us a call on that 13 28 61 phone number. And we're happy to answer any of your questions. I'd much rather teach you how to use our tax system because you're going to be more likely to use it well. If you think that your boss may not be paying you superannuation or you're a little bit unsure about that, give us a call on the 13 10 20 number. And if English is not your first language, we also have a translating and interpreting service on 13 14 50. Another really good resource for you is the ato.gov.au website, where you can find all the information that we'd be able to provide you over the phone. What I might actually do now is just take a bit of a step back. We have one question that's come through. Do you still have to include Medicare and title statement if your income is less than 18,200 or if we have a private health insurance? So the Medicare, I think you mean the Medicare surcharge, that won't be applicable if you earn under 18,200, okay? And if you have private health insurance and you do earn in the upwards of 90,000 plus, you won't be eligible for the Medicare surcharge. So what I might do is thank you all for your time today. It really is quite appreciated. And I would appreciate any feedback that you can pass on to Sarah so that we can further make this presentation more useful for you. I'd like to take this moment now. If anyone has any questions at all, please chuck them into the chat, or alternatively, take yourself off mute and ask them to me now. So we just had a comment, you wouldn't put in a tax return if you earn less than 18,200. That is with the exception, unless you paid at least $1 of tax. If you had $1 of tax taken out of your statement, or $100 or $1,000, you must lodge a tax return. It doesn't matter how much money you were paid that year. So you could earn $10,000, but you had $50 taken out in tax. You have to lodge a tax return. Firstly, because it's the obligation. And then secondly, because that's how you get that money back, because you're under the 18,200. But if you paid no tax, you earn under 18,200, you don't need to do a tax return. Do we have any other questions at all? Okay. Well, at this point, how do I get involved in tax volunteering? I recommend that you look at our website. It's called Tax Help. Tax Help, and that's where if you'd like to either take advantage of the services we offer, or if you'd like to become a volunteer, we'll provide the training in how to do tax returns so that you can then do it for people in your community. What is the most common mistake in tax returns? The most common mistake, well, I don't know about the most common, but one of the mistakes that I've seen is that sometimes people see the $300 deduction without receipts. Now that's a really big error that people make, thinking that they can claim, let's say $299, I don't have to provide any receipts. Now you have to make sure that you have spent the money and you must be able to prove it in some way, okay? While it may not be receipts, we will take examples like using your bank account. And if you say, for example, I spent $300 on shoes, well, we'll need to see evidence that you actually bought those shoes and actually used them. If working from home has impacted the working hours, how can I calculate the gross income? Should I ask the accountant of the company, or do I need to calculate on my own? If working from home has impacted the working hours, so that it's really how much money you've earned for the year. So if you've had to work from home and you've had to work reduced hours, all we're going to be calculating the tax on is the amount of money that you earned in that reduced time. If you're talking about the working from home deduction that's available, you just calculate how many hours that you're at home. You'll know what days you were at home and then what your rough estimate of your days is. It's what's reasonable. Good to include the tax form in the session to point out what's asked, what's tricky. Yeah. And thank you very much, Sarah, for putting that link on the tax help volunteer. How long do you need to keep receipts and what type of receipts don't need to be kept? So if you are claiming a deduction in Australia, you must keep receipts for a minimum of 2 years, okay? You can keep it longer, that's perfectly fine. We do say the 2 year as a standard, but if we find out that, say for example, you've been doing something dodgy, we can go much further back in trying to determine whether or not, you know, you've been trying to avoid the law. But if you've done the right thing, 2 years is the minimum you need to hold it for. All right, at that point, I might pass it back to Sarah. Thank you again for your time. Sarah?
Thanks, everybody. So if there's no further questions, please join me in thanking Alan from the ATO for his time today. Definitely great presentation and some great questions. I will be in touch with all of you pretty soon just to get some feedback to see how we can improve our sessions. Of course, like, you know, we welcome any feedback, and definitely, like, you know, it was great having you all, and thanks for your time today. Take care, everybody. Bye for now.
See you later, guys.